Goldman Sachs quietly dropped a report. By 2030, U.S. data center power demand is projected to surge by 160%. Solar? It shuts off at night. Wind? It stops when the air is still. But AI doesn't sleep. AI needs electricity 24 hours a day, 365 days a year. So here's the question. Everyone! What is the only energy source that can reliably power this revolution? And who is the largest private operator of that energy source in the United States? The answer is one stock, one ticker. And Wall Street is quietly loading up on it before the broader market catches on. Today, I'm going to walk you through what I'm calling the three waves of the AI power crisis, and why this single company is the only name positioned to profit from all three. If you watch this video to the end, you'll understand exactly why analysts are calling this the energy stock of the decade, and what price targets the smart money is already whispering about. Let's get into it. The company is Constellation Energy, ticker symbol CEG. And before you click away, thinking this is just another utility stock, let me stop you right there. This is not your grandfather's power company. Constellation is the largest operator of nuclear power plants in the United States, controlling roughly 10% of all clean energy produced in this country. That's not a typo. One company, 10% of America's clean energy. And nuclear is the only baseload energy source on Earth that runs 24/7 with zero carbon emissions. That is exactly what hyperscale AI data centers are desperate for right now. Let's talk about Wave 1, the hyperscaler land grab. In September of 2024, something historic happened. Microsoft signed a 20-year power purchase agreement with Constellation to restart the 3 Mile Island nuclear facility. Yes, that 3 Mile Island. Microsoft is paying a reported premium of around $100 per megawatt hour, which is nearly double the going market rate. Why? Because Satya Nadella knows that without firm, clean, around-the-clock power, Microsoft's AI ambitions are dead in the water. Copilot, Azure AI, OpenAI infrastructure, all of it runs on electrons. And Microsoft just locked up 835 megawatts of Constellation's supply for 2 decades. Then Amazon followed. Then Meta started circling. Google is reportedly in advanced talks. This is what the analysts are calling the hyperscaler land grab, and Constellation is sitting on the most valuable real estate in the energy market. According to Morgan Stanley, every additional power purchase agreement Constellation signs at premium rates could add $8 to $12 per share to its valuation. The company already raised its long-term earnings growth guidance to over 13% annually, and management has hinted there's more upside coming. Now, Wave 2. This is where it gets really interesting, everyone. The Trump administration's energy policy pivot. The new administration has openly declared nuclear energy a national strategic priority. We're talking about streamlined NRC licensing, federal loan guarantees, and what insiders are calling a nuclear renaissance executive order framework. The Department of Energy has already committed billions toward small modular reactor development, and Constellation is positioned as the prime operational partner. According to Bloomberg, U.S. nuclear capacity could expand by 35 gigawatts by 2035, and Constellation owns the operational expertise, the licensed sites, and the trained workforce that no competitor can replicate overnight. This is a moat, everyone. A regulatory moat, an operational moat, and a political moat all stacked on top of each other. You cannot just build a nuclear plant. It takes 10 to 15 years and tens of billions of dollars. Constellation already has 21 reactors running across 12 sites. Wall Street is calling this an irreplaceable asset base, and that's why J.P. Morgan recently raised its price target on CEG to $347, with a bull case scenario reaching $420 per share. Wave 3. The grid scarcity premium. Here's what almost nobody is talking about. The U.S. electrical grid is running out of spare capacity. PJM Interconnection, which is the largest grid operator in America, just held its capacity auction and prices spiked by over 800%. 800%! Everyone. That means every megawatt Constellation already produces is suddenly worth dramatically more than it was 12 months ago. This is pure margin expansion with zero additional capital investment. Bank of America estimates this capacity price surge alone could boost Constellation's free cash flow by $2 to $3 billion annually starting in 2026. That's not a forecast for some distant future. That's earnings power hitting the income statement within the next 18 months. And when you combine that with the premium PPA contracts from the hyperscalers, you get what analysts are describing as a double-stacked earnings catalyst. Revenue going up, margins going up, and the multiple investors are willing to pay for those earnings is also going up. Let me give you the numbers that matter. Constellation's fiscal 2024 adjusted earnings came in at the high end of guidance. For 2025, management is guiding to adjusted operating earnings between $8.90 and $9.60 per share. By 2030, multiple analyst models suggest earnings power could reach $18 to $22 per share. Apply a reasonable utility growth multiple of 25 times, and you're looking at a stock that could trade between $450 and $550. From current levels, that's a potential upside of 80 to 100% over the next 4 to 5 years, with a dividend that management has committed to growing by 10% annually. But let's talk about the risks, because I'm not here to sell you a fairy tale. Risk number 1. Regulatory delays. Even with a friendly administration, the NRC moves slowly. Risk number 2. Execution. Restarting 3 Mile Island Unit 1 is targeted for 2028, and any slippage there impacts the Microsoft revenue stream. Risk number 3. Valuation. The stock has already run hard. CEG is up over 90% in the past year, and any short-term correction in the broader AI trade could pull it down 15 to 20% quickly. These are real risks. You need to size your position accordingly. However, here's why the long-term thesis remains intact. AI compute demand is not slowing down. It's accelerating. NVIDIA's Jensen Huang said it himself. The next generation of AI models will require 10 to 100 times the compute of today's frontier models. That compute requires electricity. That electricity must be clean to satisfy ESG commitments. And it must be firm, meaning available 24/7. There is exactly one technology that checks all 3 boxes at scale today: nuclear fission. And there is exactly one publicly traded pure-play operator in the United States that dominates that market: Constellation Energy. Wall Street is starting to wake up. According to recent 13F filings, hedge funds including Citadel, Millennium, and 2 Sigma have all increased their CEG positions in the last 2 quarters. Vanguard and BlackRock combined now hold over 20% of the float. This is institutional accumulation, everyone. The smart money is already in the building. So let me summarize the 3 waves one more time. Wave 1. Hyperscaler PPAs at premium pricing, locking in 20-year revenue streams from Microsoft, Amazon, Meta, and likely Google. Wave 2. Federal policy tailwinds, with the nuclear renaissance becoming official U.S. industrial strategy. Wave 3. Grid capacity scarcity, driving an 800% price surge in capacity auctions that flows directly to Constellation's bottom line. 3 independent catalysts. 1 stock. 1 ticker. CEG. Everyone. The AI power crisis is not a future problem. It's happening right now. Data centers are being delayed because there isn't enough electricity to power them. Hyperscalers are signing contracts at any price to lock up firm, clean energy. And the company sitting at the center of this storm, with the licensed reactors, the operational track record, and the political tailwinds, is Constellation Energy. If you're building a long-term AI portfolio and you only own the chip makers, you're missing half the story. The picks and shovels play of this entire AI revolution might not be in semiconductors. It might be in the boring, overlooked, deeply undervalued world of nuclear power. And CEG is the purest expression of that thesis on the U.S. stock market today. Please do your own due diligence, watch the entry points, and consider dollar-cost averaging rather than chasing spikes. Investing always carries risk, and past performance does not guarantee future returns. If this breakdown helped you see the AI power story in a new light, please hit the subscribe button and drop a like so I can continue bringing you deep dive research like this. Take a careful look at the stock we covered today, and I wish you all successful investing. I'll see you in the next video.